Westpac has seen its annual profit slump by 2/3 after it was fined $1.3 billion for those 23 million breaches of money laundering laws. The big bank's full-year net profit is down 66%. Senior business correspondent Peter Ryan joins us now for the first time in the studio for a very long time. Usually talking to you at your office at home, so it's great to have you back in the studio. Westpac, another of the big banks to report a big drop in profit. To what extent is this adversely affected by the fines to a greater extent than the other banks?
Well, unlike the other banks, Westpac's had this $1.3 billion settlement or penalty that is negotiated with the financial crime agency Austrac. That's weighed heavily on its results, as you said, down 66% in the full year to $2.29 billion. So that's been significant, not just in financial terms, but also for Westpac's reputation, given that the links to its platforms being inadvertently used by child sex rings in Southeast Asia. The other big issue, Joe, is what's happening with banks at the moment in general. Westpac has had to factor in potential impairments of $3.18 billion. This is for potential loans that might go bad or loans that might default. That compares to this time last year when the impairments were at $794 million. So that's been a significant ramping up, and this is because of the pressure on banks, people out of work, and Westpac's also made a mention of what's happening with the home loan deferrals, which is also, weighing heavily on banks.
And so that's a provision for expected problems rather than big problems that are already existing?
Yeah, Westpac, like all the banks, are bracing. They have to put money aside where they see potential problems in borrowers or businesses defaulting. So that's why they've had to put that much money on the sideline. Banks, including Westpac, they all have significant buffers that have been built up in their capital reserves to deal with what the banking regulator calls the ability to be unquestionably strong. But just on those deferrals, Westpac says it now has 41,000 home loans in deferral. That sounds like a lot because it's valued at $16.6 billion. But that's down from 146,000 loans on deferral. So banks, like Westpac, are working overtime with their consultants in call centres, ringing people on those home loan deferrals to do anything to pay something, whether they're paying interest only, just to keep those loans going. But that's significantly good news for Westpac, and other banks, including the Commonwealth Bank and the ANZ, have seen significant improvements in those deferrals.
Is there any optimism that you're detecting in the banking sector at all, taking into account, like we had nationally yesterday in Australia, no locally acquired cases? Victoria has been incredibly successful at getting those numbers back to zero. 3 days now with 0 cases and 0 deaths. Is there any optimism you're detecting that the economic hard landing might not be as hard as people are anticipating?
Well, it's been an incredible 7-month period, as you mentioned, Joe. I've been reporting into you from home, but we've seen those home loan deferrals, that the banks have actually taken this extraordinary action to put not just home loans but also business loans on deferral. But they're gradually being wound back, possibly to end in March. So that's one potential cliff that needs to be managed, but that's heading in the right direction. Then, of course, you have JobKeeper, which is going to be gradually tapered back. So, all these things are being calibrated and managed to ensure that there's not going to be a shock when that emergency support is wound back. But it's very clear that next year, 2021, is going to be very, very hard. But we've been seeing, from the banking regulator, APRA, saying that households have been saving or squirreled away or hoarded more than $100 billion in savings. You could take the view that households want to pay down their debt because of this crisis, but also that they've put enough in reserve to deal with the winding back of those emergency programs like JobKeeper, etc. So it's pretty fragile, but compared to what we were looking at 7 months ago when we saw those initial signs of rising unemployment queues outside Centrelink, we're tracking pretty well on the economic side and also on the health side, as you mentioned.
And just briefly, a couple of other issues, minor things happening, minor things saying sarcastically this week. So Reserve Bank board meeting tomorrow. Expectation is there'll be another cut. And then what are you looking for from the US election this week?
Well, it's looking as though the Reserve Bank will cut the official cash rate from 0.25% to 0.1%. So pretty much the firepower has been just about exhausted, and the Reserve Bank has said that they won't be going negative, but they're also expected to announce a massive program of government debt buying or quantitative easing, which could see the Reserve Bank on secondary markets buying longer term government bonds, not just 3-year bonds, but 5-year or 10-year bonds. And this is to make sure that the interest rate that the government pays on the money that it borrows is kept as low as possible.
And the Reserve has been pushing back against doing that so
That's
far.
right, yeah. So on the one hand, we've got, for example, last week, the Deputy Governor of the Reserve Bank, Guy Debelle, said it's looking as though September GDP will come in slightly positive. And while he didn't say the recession was over, some quarters took that as a view that, well, we're coming off from a very, very low base, having fallen off the top of the table in the recession, right down to the bottom of the cliff. We're gradually coming back up. There are signs that the economy is starting to recover. So there is some criticism that the Reserve Bank might be sending the wrong message by cutting rates, that things are perhaps worse than the official figures are showing. Of course, the US presidential election is another concern. And now that the opinion polls and also betting markets are showing a much narrower gap between Donald Trump and Joe Biden. And for markets, the worst thing is that uncertainty. If you end up having a contested result and you don't see a result for days, that could provide some short-term volatility for us.
So much happening this week. Okay, thanks for that, Peter Ryan. Okay.